हेलो पीपल। वेलकम टू येट अनदर एपिसोड ऑफ डिस्कवर विद सिंह। आज हमारे साथ हैं राज भाई। राज भाई इज अ कॉलेज सीनियर एंड ऑल्सो अ मेंटोर इन अ वे। सो राज भाई, आई वुड लाइक यू टू फर्स्ट इंट्रोड्यूस योरसेल्फ टू द ऑडियंस।
Yeah, absolutely. Hi, this is Raj Abhisar Agarwal, speaking live from Denver, USA. It's like 9 in the night here, 8:30 in the morning in India, and right now I'm here for a job. I'm working as a performance analyst at one of the Morgan Stanley subsidiary in wealth management. I recently completed my master's like a couple of months ago from Boston University in economics. And as Preet said, I was his senior in Khalsa. So I did my econ honors from there back in 2018. I started there, and 2021 I graduated in the middle of lockdown. And one of the reasons why I'm here is because I'm also a content creator on Instagram. Not anymore. Like I had to because of my professional job, I had to deactivate my page. But I reached around 52,000 followers, and finance is like my go-to place, my bread and butter. And yeah, that's pretty much about me.
So yeah, he has a lot to talk about when we talk about his introduction. So Raj bhai, as you talked about your finance content creator journey, I would like to first ask you, how was that? Why did you initially start? And how does it actually feel like to have that ability to be able to influence such a large number of people with your content?
Honest. Okay. So I'll be like crystal clear and honest here, totally honest. I started it like just because like during the lockdown, I had like so much free time, obviously. People didn't have anything to do. Colleges were like completely online. I really didn't know what to do. So I just started reading about like stock market and finance. Some of my friends, they were like, we invested money, we are making money. So I was like, yeah, let's just try. And
Mm,
when I started deep diving into it, I was the same person who didn't even know what is stock market before lockdown. And
mm,
during the lockdown, I just became a finance person. But anyway, I noticed one thing on that there are like a lot of news and a lot of information on a daily basis, which is very normal and very important news, but it is missed by a lot of people. People don't pay
mm,
attention to the news, or there are not enough sources for getting that information. So I just wanted to bridge that gap to add that value and simplify finance, spreading financial literacy, because I
mm,
understood that. Because earlier I understood that finance and law, these are two fields which are made complicated than they actually are in order to just make money. You can
mm,
throw away all jargons in investing and stuff, but trust me, it is supposed to be simple. People just make it complicated. So with that aim in mind, and with a lot of free time, I just started this content creation journey. And coming to
mm,
the second part of the question, that how it feels like to influence people, trust me, when I started, I just started out of nowhere. I didn't have any tool. I had a basic camera. I even didn't know what to speak, what to do. I was having a very serious, face, and I was recording videos. It went
mm,
nowhere. But after a couple of months, when I saw the engagement, when I saw that hey, something is going on, and people started like reaching out to me, I started gaining followers. It was one of the best feelings that hey, I'm being able to help someone. I since day one, I made sure that I reply to each and every follower, which is like very rare. A lot of finance influencers won't even reply to any day, like ever. But I used to talk to people. I used to help them. I used to guide them in any manner possible, and it was a very good feeling. Trust me, I felt empowered. I felt like that I'm being able to make a difference in people's life, and that really is priceless. Trust me, money is not a thing. Money can be earned in different ways, but this value, this respect, this confidence is like priceless for sure.
absolutely. And like there's the dialogue in this Spider-Man movie that with more power comes more responsibility. So
For
I
sure.
believe it was more like that as well, because you're also in a domain like finance where you cannot be
Exactly.
wrong.
Absolutely. Because like finance is one of the places where, if you help someone to make money, they will
Mm,
make you their God. Okay. But
mm.
if by chance, just once, if they lose money because of you, they will curse you really bad in seconds. So
True
yeah,
that.
you need to be like really sensitive and really, really, uh, transparent when it comes to like finance.
Right, right. And as you talked about, helping out other creators as well, they reached out to you for help. Are there like certain two or three key advices or suggestions that you tend to usually give people who just starting out?
All right. So not only I help creators, but like random followers too. But about
Hmm.
creators, if you want to like get two, three suggestions for me
Hmm.
from me to like
Hmm.
about when to like while starting out, I would say like first of all, consistency is the key. Like there will
Hmm.
be days, there will be like probably weeks or months when the content will not go up. You'll feel so dejected. You'll feel like, I'm wasting my time. Nothing is happening. Nobody's recognizing my value. But trust me, consistency is the key. Slow and steady wins the race. That's my motto when it comes to content creation and even in life. And second, I would say it's about quality over quantity any day. You might not want to post a single video every day. Post probably two a week, but make sure that you
Hmm.
put your head, heart, and soul into it. And
Hmm.
third, I would say, try to solve a problem, like try to create content which is relatable to people.
Right.
Since day one, I have to make a content which is like, which gives incentive to people to share it with
Hmm.
others. There are like a lot of reels where you will see and you'll be like, okay, I'll just scroll through it. But there will be some reels where you would want to share it with one of your friends, like some sort of hacks or some sort of like, explaining some jargon in like a simple language. So yeah, these three
Hmm.
things: consistency, quality over quantity, and relatable content is like the go-to things, I would say.
Right. I felt some of them were directed towards me as well, and I'll also take them in
For sure.
my journey as well. So yeah, thank you for that. Now, Rajbhai, in your profile and in your Instagram profile and your other social media handles, I've observed that you've been putting out a lot of information around the books that you're reading and how reading a lot of books has impacted you. And since I've also recently developed an interest and inclination towards reading books, so I tend to ask people about the books that they're reading. So for you, my question is, what were the two or three books that changed the game or changed the way you perceived finance for you, and a few learnings from those books that have
Sure.
struck out through the journey?
So interesting thing here. I've never been a book reader. Okay, I hate to say it,
Mm.
but it is what it is. Like I literally used to hate reading books. I never before lockdown, I never even finished a single book which is not academic. Okay, so I
Mm.
used to be the person who used to love reading subtitles, but not books. That's not me. But just like during lockdown, one of my friends, he just suggested that, hey, just read this book. It's called Rich Dad Poor Dad by Robert Kiyosaki. I'm pretty sure everyone has heard of it. It's like really famous. But I just started that book, and for the very first time in my life, within 3 days, that was like a small book, not a very big. It's like this big, but
Mm.
it has like 250, 300 pages. I completed in in just 2, 3 days, and everything changed there. That was like the spark, the initial spark, the inception point for me to get into this field, deep dive into it, because like I read the power of having financial literacy, what is a passive income, how you should develop it, and how
Mm.
you cannot grow as a person like financially if you do not have like multiple sources of income. So Rich Dad
Mm.
Poor Dad became like my go-to book. It became my favorite book, and it was my start. So that book is like must read if you still haven't read it. And if you
Mm.
haven't read it, you might want to look into different books by Robert Kiyosaki. He's like a legend, according to me.
Mm.
Second, again, it's like a common book, but trust me, if you still haven't read it, it's called Psychology of Money by Morgan Housel. It doesn't matter what your field is. It doesn't matter if you don't even know what F in finance stands for, but
Mm.
it is a simple book. You will totally get it. And then one of my favorite investors, his name is Peter Lynch. Not very famous, like people generally stick to Warren Buffett, but I
Mm.
prefer Peter Lynch over Warren Buffett any day.
Mm.
So yeah,
Mm.
his book, it's called Beating the Street. He has written like a couple of books. Beating the Street could be like a little high level if you are starting new, but Beating the Street is like a hardcore finance investing stock market book, and I really like that. And yeah, I could like keep naming tons of tons and tons of book, and just like these were like hardcore money in finance. But I would also like to mention one book which is like more of self help, which
Mm.
is like really motivational, and it might really put like have a big impact on you. It's called Good Vibes, Good Life by Vex King. It's like a small
Mm.
read, but it's like a very impactful and very beautiful read. And I just, texted Vex King personally on Instagram about like, thank you for the book.
Wow.
And he liked my message. So that counts. I was like, really. But yeah, that's a great book. If you are not into like a lot of academia, if you are into like, more of self-help and life, that's a very good book.
Great. Glad to hear that. Regarding, I also had a similar incident. I recently finished the book Factfulness, so I was also so intrigued. I tried to connect with the authors. Out of the three, two were still alive. The father died. The three
Okay.
people wrote the book. So I texted. I tried to connect with the other two people on LinkedIn. I connected with one of them, and she
Nice.
replied a thanks to my message. So even I had that feeling, and it was great. So yeah.
That's great. And recently, like, I was like in a part of a lucky draw, and there I won a Psychology of Money signed copy by Morgan Housel.
Oh
Like,
wow.
Yeah, so that's like my prized possession now. I'm gonna keep it always with me for sure. He doesn't know who am I, but still I have that book signed by him
Great, great. Yeah, that's a souvenir for you forever now. You can
for sure.
probably get it framed or, so that it doesn't even wear away. Great,
Exactly.
great. And now another question, Rajbhai, being what is your understanding or your perspective of wealth?
Okay, so yeah, so wealth is like, it is treated as same as money. It is treated same as being rich. But I just feel that, wealth is more not about being rich. It's more about having the freedom to do things that you want. Like it's not that simple. People just think, okay, yeah, freedom, whatever. But no, it's
Hmm.
not that. Being rich is the first step to become wealthy, but being rich and being wealthy is not the same.
Hmm.
Making more money than others makes you rich, but making more money than others and keeping that money in your family for generations, investing that money properly so that it becomes like a passive income, it gives you freedom to do anything you want with your life, is actually being wealthy. So coming from a business class family early on from my life, I like dinner tables the dinner talks during my house like were like around interest rates, business, money. So since childhood I had that upbringing in such a manner that I got a very good essence of money and wealth. It's a very
Hmm.
big thing. So yeah, I have like a very deep relationship with money. Well, like a lot of people say that money is not everything. Money is not everything. I disagree. I trust me when I say it. Like I personally believe money is everything. To be honest, like even Warren Buffett, one of his like quotes, like one of my favorite quotes, he says
Hmm.
that anyone who's money is not everything. He says money is not everything. Make sure you earn a shitload of money before saying such nonsense. So that's
Hmm.
like one of the most impactful quote which like changed my perspective, that even that person says that money is like important, because in India we all look down on being try to making more money. Children
Hmm.
are asked not to talk about money, but I just disagree. There's like obviously a limit to it, but you should not refrain your children or people who are young to talk about money. You should let them participate, you should make them understand, you should teach them about money, taxes, accounting, whatever. So yeah, according to me, being wealthy and being rich is like very big different thing.
Hmm. So Rajbhai, when you say that the amount of importance that you've given to money in, that explanation of yours, I believe that there must be a sense of people जो अगर उसको ध्यान से समझे नहीं कि यार इतनी importance मनी को हम नहीं देते हैं, मनी important है पर बाकी चीजें भी important है, I think, पर जो perspective that you're mentioning is that the ability to have and manage your time and the ability to live the way you want, money is
Yeah,
paramount for that, and that is the perspective through the lens of which people should be looking at that, right?
absolutely, more is less.
Yeah, more is less. A counter question that I had to this wealth question was कि मैंने बहुत देखा है कि हम ये तो बात करते हैं कि how to make your first 1 crore, yeah, how to be rich, or how to save this amount of money today, or to leverage the benefits of compounding, and to make this much money when you're
Mhm.
that absolute follower of that. But my question to you is कि क्या हमें, मतलब people of our age, like we're Gen Z, or we're relatively young, इस बारे में कोई बात नहीं होती है कि आपको स्पेंड कैसे करना है, या व्हाट आर द things that you should spend on, what are the experiences that you should spend on, should you
Yeah.
go to this vacation, should you buy this certain thing for you if it makes you happy. So I want to understand from you as a finance content creator, how should people view spending, and what is your take on that?
See, I just feel that there's no perfect formula or like a magic thing which I could tell, because like when it comes to spending and when it comes to interest, experiences, and like priorities, it's like very subjective according to someone, according to people to people. For example, I might spend say $100 on a football match, while a person would like even not pay $10 for the same. So
Hmm.
people have like different interest and priority. But speaking from a general perspective, I would say that luxury has no upper limit, and being young, you should stay away as much as you can from luxury things. I'm not see there's a big
Hmm.
difference between being comfortable and being luxurious. People just say that you how much money will you save? Itna paise bacha ke kya karega if you are living like that? Or no, be comfortable. Like make
Hmm.
sure that you are meeting all your ends. You are not struggling anywhere, you're not sacrificing your basic needs. But then when it comes to luxuries, when it comes to like, eating outside, going on vacations, like spending money on phone or like whatever electronics, there, that's where you want to like, try to save a little. And I just feel, spending is also like, even if you're spending, for example, you say, hey, this is a particular level of lifestyle, I can't live below it. Now during like in to maintain that lifestyle also, you can like, do a lot of smart things. For example, like, credit cards is one thing which people do not understand. Like, according to me, credit cards is one of the most dangerous financial tool ever
Hmm.
created. Dangerous because if you use it properly, you can make so much money. But if you do not use it properly, you can literally go broke. You can literally go broke. So people don't understand that even with the same amount of spending, you can spend it very well. You can, like for example, in the US, people don't understand that. For example, if you come to the US, you open a bank account with like JP Morgan Chase or Bank of America, you will get a 0.1% interest or probably 0% interest. That's how it works
Hmm.
here, right? The
Hmm.
top 5 6 banks, that they have a monopoly of 0% interest. But at the same time, if you just do a little bit research and you go to banks like Citi, you go to banks like Capital One or SoFi, they will give you 3.5 to 4% interest. That's free
Hmm.
money. That's free money. Why
Hmm.
why not do that? So similarly in India, if you have a SBI bank account, while you have versus you have a IDFC First Bank or Bandhan Bank account, you will get a 2 or 3% interest difference nowadays.
Hmm.
So
Hmm.
do those small things. Get the best credit cards. Try to maximize your all the cashbacks which you can get. So I would say for this thing, like, spending smartly, trying not to spend much on like luxury things, because I just feel, reap the benefits later. Sacrifice now and save later. I'm not saying like, being that boring person sitting at home not doing anything. Obviously experiences are really important. Go in a
Hmm.
concert once in a while, go to a club once in a while, that's fine. But there should be a limit, there should be a hard line, and you should have like that motivation and that discipline where you know that, hey, this is getting too much, this is getting out of hand. And I would say, like,
Hmm.
last thing, budgeting is also very important. For
Hmm.
example, in the beginning of the month, just say that this is my limit, I can't spend over it. And tracking your expenses is one of the, like, most underrated advice. Last year in January 2022, I started tracking every single dollar which comes out of my pocket and which comes in my pocket. And since
Hmm.
then, I'm so much aware of my money. I'm being able to, like, spend very intelligently. When I see that, hey, last month I spent $300 eating outside, this month I'll try to be a little frugal, so I end up spending, like, say, 210. So that makes a big difference. But at the same time, if you don't know how much did you spend last month, you might end up spending more this month than last month. So
Hmm.
budgeting, tracking, being frugal, not spending on luxuries, spending smartly, a lot of things go in it.
Superb. Yeah, I was also wanting to know. Glad it came out of your conversation itself. Are there certain applications or certain softwares that you use to track, or how do you track, or how would you suggest people to budget?
It is very simple. It is very simple. I don't use any software. I don't use any application. I just use Google Sheets. That's it. Google Sheets is always open in my laptop, Google Chrome in one tab. And the fact that I don't use Excel, I use Google Sheet, it's because Google Sheet is also linked to my phone. So in case I forgot to, like,
Right.
put an entry in my laptop, I can, like, do it on my phone instantly. Excel can't be linked online, right? So
Right.
just Google Sheet. I have a basic template and I made it myself. It has categories, like, for example, eating outside, groceries, necessities, transportation,
Hmm.
rent, electricity, like something like this. And then it totals everything up. It shows me my fixed costs, it shows me my luxury spending, it shows me my total spending. And then, like, there are basic formulas like sum and all that, like anybody could do it. So very,
Hmm.
very simple. It'll take you like literally 2 or 3 minutes to set that Google Sheet up. And every month I
Hmm.
just copy paste it for the next month, clear all the entries and start putting the new entries. As simple as that.
Hmm. Wow. Now you said it so simply, makes it truer for everyone, because even I was wondering and pondering on, looking for various applications. I've met people, who we've had discussions on, what app to use for budgeting, and things are getting out of hand. So I think that's an eye opener in a way that it's that simple, and using Google Sheets can be a good,
For
efficient
sure.
way to.
Or just go on Play Store, go on App Store, just put, like, track expenses. Tons of apps will come and they will be really good. They will show you all sort of graphs and everything if you want. But trust me, keep it simple. Open a Google Sheet. It'll be
Hmm.
there on your laptop, on your phone, everywhere you want, and just put an entry. Do the sum. You're good to.
Great. I'll try and do that definitely. I hope the
For
people do as well. Now, another question being, this is more of a myth, and I wanted to talk to you about the same. मैंने देखा है कि राज भाई हम सब लोग बात करते हैं कि कैसे डूइंग योर ओन रिसर्च व्हाइल इन्वेस्टिंग इज
Yeah,
पैरामाउंट, कि आप
for sure.
डोंट लिसन टू पीपल्स एडवाइसेस एंड इट्स you who's making the decision, so you should be the one completing your research, going your way through that. But my follow-up question to that is, for example, say Nithin Kamath hai, he's
Yeah.
advising or he's suggesting that this is his portfolio, or these are the certain stocks that he's picked for this year, and he's
Hmm.
just putting it out there. So for
Right.
me, as a somebody who's growing, somebody who definitely knows that that guy has 10x 100x of my knowledge, so one basic fact is that that guy has more knowledge, that guy has more understanding about the market than me, of all I can predict. So that's out of the way. Now, why should I, as an investor, what is the incentive that I have to do my own research and not just go for certain stocks that some
Mm-hmm.
professional has recommended?
Yeah, that's a great question for sure. Yeah, I would totally agree that yeah, we have like very less incentive to do our own research. But now coming to Nitin Kamath, last year Nitin Kamath earned 100 crore rupees as salary. Okay, so just imagine the type of risk appetite he has. Even if he
True.
lose like say 5% of his money, that is 5 crore. It still leaves him
True.
with 95 crore rupees. I don't think as students we even have like 95,000 rupees to invest, right? So now we obviously can't keep ourselves in the same boat. And obviously, I do
Hmm.
understand that being in finance, I should talk about percentage terms and not absolute terms. 5 crores is not the right thing. 5% is the right thing because he will lose 5%. We will also lose 5%. But again, his risk appetite would be really different. He knows what
Hmm.
he's doing. He might sell and you might even not know. You might keep holding the stock till like whatever time and you might lose your money. At the same time, he's in a different phase of his life. He does it full time. There are so many things that you can differentiate between him or like any professional fund manager or any person who's coming on the news or like just telling you that hey, buy this stock. He might himself not be buying. Like Nitin Kamath won't lie, but a lot of finance influencers, they will tell you that hey, I'm buying this stock, but there's no proof and they will never prove it to you. So that's where it comes. Your own research is very important because if you don't know, if you don't understand why you put the money in the first place in this thing, you will never know when to sell, when to exit. You will
Hmm.
never be able to resist that temptation. If it goes down, you might end up selling. If it goes up, you might end up selling where you had to like stay in it or where you had to exit. So I would say that if you really really are serious about money, if you do not have a lot of risk appetite, because see, I don't have a lot of risk appetite. I am very sensitive when it comes to money. I like taking small risk but calculated risk. There are people who
Hmm.
take like big risk, probably go ahead, go crazy, like do Google search, like top 10 stocks, ask chat GPT. But that's not me
Hmm.
because I know
Hmm.
that I can't lose money when it comes to investing, when I can spend some time. See, at the same time, me not being a financial influencer, speaking from a person who was like 3 years ago, who doesn't even know what
Hmm.
is stock market, who just knows the basic. Even if you can't research, and probably you might be an engineer, you might be a doctor, you might be a lawyer, finance is not your field. Warren Buffett has said over the years, and stats has also proved that majority active fund managers lose to passive fund management. Okay, what does that mean?
Hmm.
The people who are buying individual stocks are not being able to even beat the returns of the market index itself. So if you can't understand, if you can't pick stocks, if you do not understand what's happening behind, if you don't have the time to research or have the risk appetite, just buy the index. Buying the index is one of the
Hmm.
simplest thing you can do. You can do a monthly SIP, you can do a weekly SIP, and just keep putting the money in the index, and you're good to go. The Nifty index has given like an average of 12 to 13% returns in the last 20 years. If you put money in S&P 500, you can get 8 to 10% returns in the last 20 years. So you can like do a whole basket of stocks. And now people would say that, hey, index investing is like so boring. Now you can make it more interesting in certain ways. I have done it. So how do I do it? So for example, in the US, there are like a couple of indexes. Okay, there's S&P 500, which tracks the performance of 500 top stocks in the US. There's
Hmm.
DJI, Dow Jones Industrial Average, that tracks only 30 stocks. Then there is Nasdaq, which is highly tech oriented, and that tracks this performance of 32 or 3,300 stocks. And then there is Russell 2000, Russell 3000, Russell 1000, which have very small cap stocks. So now all of these indexes have different type of weightages, have different type of calculating methods, and different type of companies and stocks in them, and different riskiness level. So that's where you can make a basket of index portfolio. like a portfolio where you have a basket of indexes. So probably like, put 50% money in S&P 500, put 20% in NASDAQ. If you are too risk lover, you can put 50% in Russell 2000. So that's how it becomes interesting, because I get it that, investing is boring. And Warren Buffett has also even said that, investing is more like seeing grass grow or seeing paint dry. It is boring. Nobody can do that. So in order to make it interesting, you can probably try to do these things, and it can actually try end up making you more money for sure.
I think that's wonderful advice and really informative for me as well. And since you also mentioned Chat GPT in the conversation, I had a question around the AI boom that has recently happened. So, have you observed certain implications or certain factors, the field of finance or the field of investing, certain implications or certain benefits that, or certain ways that, AI can be leveraged in finance or pertaining to the field?
100%. See, AI has both its pros and cons, and it's going to change the world for sure. But it is I just personally feel it's too early, and we just don't know. Even in just 6 months, everything might change. For example, like a couple of weeks ago, when like Satya Nadella, the Microsoft CEO, when he was like introducing ChatGPT to the world, he tried to do a basic stock analysis between two very famous stocks in the US. And to do an analysis, ChatGPT was trying to get the EPS of these two shares. Now, what is EPS? EPS is basically earnings per share. That's one of the good metric to compare these two stocks. And those two EPS were like wrong, and they were off by like 10-20%. So now that's like a big blunder. The problem with ChatGPT is that it tells you the answer directly, but it never tells you the source, right? On Google, if you like do a Google search, you'll see the source and you can choose that, hey, okay, the Wall Street Journal is like a good website. It won't have wrong information. Probably Forbes won't have the wrong information, but this random blog might have wrong information, right? So you can do a little bit of selection there. So the problem with AI right now with ChatGPT is that you just never know what it is telling you. And even the founder of ChatGPT, like recently last week in
Mm,
one of the interviews, he said that I am afraid of my own
mm,
founding, that it might be used to spread a lot of disinformation on a mass level. So for example, somebody does a stock analysis on ChatGPT and it does it wrong, and it says there's 1,000x like potential in the stock, and people might, it becomes a mass news. People might end up buying it and losing all the money. But at the same time, a lot of good things are also coming. Like people are saying that, hey, we will lose our jobs and everything. Yeah, there is a threat for sure. But I just feel that after a certain point, machine won't be able to replace you if you have the skills, if you have the, that mindset. And at the same time, when it comes to people's skills, being that person, being the charming person, being a helpful person, being a humble person, AI can never do that. So it's
mm.
very important, even in office work or even in your school life or college life. Being a very good student is important, being academic is important, but being a good person is very important, especially now when AI is like literally standing on the door to take our jobs. So being a person is very important right now. But I would say there are very good benefits as well. I recently saw like a couple of days ago that Chat GPT has launched something which has like which is taking over all the Microsoft apps, for example, Excel, Word, PowerPoint,
Mm,
Outlook. So what will happen is that you can just type, hey, make me a 10 slide presentation on, for example, you are in a
mm.
meeting with a boss and a client, and whatever the happened in the meeting, you can just say Chat GPT on Outlook that, hey, make the notes. Before the meeting ends, it will give you the precise notes that what happened in the meeting. Now you will say, hey, just make a presentation of these notes. 10 slides in a second for you right there. 2 days worth of job in seconds. So these things will become like really helpful and really easy. And yes, this will eat jobs. Like the number of analysts which companies hire might go down, but again, you need to have that skill set. It's like now more than ever where you need to be like, know your stuff and, super specialization. But I would say again, both pros and cons. Kind of too early, probably too late. Not sure about it. We'll find out.
We surely will. We surely will
Yeah.
find out. And yeah, delving into the discussion about jobs, we know how we're hitting a recession, or as what people say, we know that there was a report that I read a few days ago by OECD. So the
Mhm.
global trade outlook, they're predicting that, the global trade is also slowing down. And I've also observed a negative air around people and their perception of their own jobs. So I had
Right.
a discussion with a few people. They were wary and, they were very cautious of making a shift because they were feeling like this recession might impact their existing jobs as well, and they won't probably want to take that risk. So what is
Right.
your understanding of how the recession is hitting, and how will it impact jobs here in India and probably in the US as well?
So yeah, this is like a very wide topic, and I happen to have like a lot of knowledge on this. For example, like I've been reading a lot. So it's a very famous saying that if you ask an economist when a recession is coming, the answer will always be 6 months. So a recession is always 6 months away, no matter when you ask an economist. Okay, so that is actually I've been hearing since like 2022 January that we are gonna hit a recession in next 6 months, next 6 months, next 6 months. We are in 2023, and if the first quarter is also about to get over in the US, and we still haven't been like officially into a recession. At the same time, I also feel that hey, when you are in a recession, you don't even know it. For example, right now, speaking at this point, we might already be in a recession. Banks have started to fail in the US, right? So I think that recession is like just a very overrated term. Bad economic phenomena, it itself is as bad as a recession itself. So you don't need to tell people, hey, wake up this morning, recession has started. No, it might
Hmm.
be already been there since like
There.
last 3 months, but it just creates a sort of panic. It creates a sense of danger, and like not a scared feeling. So I would say that not to talk about recession a lot is like is actually smart. But again, academia, when it comes to RBI, when it comes to Federal Reserve, they need to use these jargons in order to like inform the public very well. And when it
Hmm.
comes to
Hmm.
jobs, I would say that hey, some of the industries obviously have been hit like really bad. You have seen IT like this past weekend only, like yesterday, Accenture like announced 2.5% layoffs of the entire workforce, which is like thousands and thousands of jobs. So obviously, I won't deny that things are like really bad. It also depends on which type of industry you are in. For example, in the US, if you see past job data, like since a couple of months, the job market is still very tight, even after layoffs of like 50,000 or 60,000 people accumulated from all these tech companies. Still, people are getting jobs, but those jobs are like probably in different sectors. There are
Hmm.
jobs in hospitality, management, administration. Obviously, you can compare these two, but on an economy level, there are still jobs. The job market is still tight, and I love to say that Indian markets, Indian economy, as an individual economy, still is doing very, very well. Even the
Absolutely.
past year, when S&P 500 was down 16%, Nifty was just down 2%, which is very,
Hmm.
very, very rare, because
Hmm.
these two are generally correlated. And US being the world economy, it just like have that impact on every other economy. And at the same time, the commentary by RBI, the inflation rates in India, it's been doing pretty good. Even like right now, if you
Absolutely.
ask me that where should I put my money, Indian or US market, I would any day say like 60% India, 40% US, probably, just for the sake of diversification. So I would say in India, there will be a job crunch a little bit, not as bad as the US. IT is being hit, IT will be hit, but again, it all goes away before we know it. When people actually, when it is announced that recession has started, technically, according to economic indicators, and not just blabbering out, according to past data, things are already starting picking up when we announce a
Hmm.
recession has started. So
Hmm.
basically, probably today is recession. If you are thinking that, hey, after 3 months, I should do this, probably do it
Hmm.
today. But I would just say that if you are good enough, if you have the right skill set, if you are a confident person, a recession can't do anything to you. Yeah, there will be a
Hmm.
tough time. You might lose your job, but trust me, you'll bounce back and you'll be just fine. So yeah, no need of panic, anything. And banks are failing. Everything is happening. Like be patient, stick
Hmm.
tight to your investments. Don't do any sort of panic selling or panic buying, and everything will just be fine. Like always, like it's a reset, business cycle, it's a typical business cycle.
Absolutely. Even a concept related to that, and which is the way you talked about inflation, कि जितना हम economics में तो we've read the concept of expected inflation, how that actually goes on to impact the actual inflation. So having a positive outlook, having an informed outlook कि चीजें वर्स नहीं है जितना हम सुन के रिसेशन सुन के लगने लग जाता है लोगों
Yeah.
को कि वर्स हो रहा है. And actually India में, if we talk about India, I have also read a few articles that say that even post-war India has been one of the few countries that have fought really well and has shown resilience in all aspects. Inflation has been coming under the under the control limit of RBI, so things are going well pertaining to the Indian economy, and hope that they able to maintain the resilience like that. So yeah, that was a great set of information for me as well. I was of that opinion that we should have a positive outlook. Now that you said that, that is reinstated my belief as well, and that we should maintain a positive outlook towards it because it essentially is positive. And even if it is not positive, you won't even know about it today. You'll know about it sometime later on. So,
Exactly.
so yeah, keep believing that.
Yeah, and if you just see historic numbers, it's just a reset. It's like every 2 3 years, certain sort of like economic slowdown happens for sure. We are coming out of a pandemic, which was like once in like a century moment probably. A supply chain issue was a problem. Still, it's been more than a year when Ukraine and Russia are still fighting a war. So yeah, these are tough times. There's like sort of like so much problem with like environmental things. People are saying that by
Hmm.
2050, the carbon dioxide level is going to increase so much. So yeah, these are like panic times for sure, but you have to find positivity among all this, because see, if you keep reading the news all the time, you'll never even smile for the rest of your life, trust me. So there's so much negativity always out there. So yeah, where I started, I want to end here. This question's answer, that if you ask an economist, a recession is always 6 months away,
I'll use this line. I'll definitely use this line now.
for sure.
Being an economic student, and otherwise also. Great. Now, before ending this conversation, Raj Bhai,
Yeah.
I would just wanted to know from you certain investment philosophies of yours, or certain strategies of yours, or certain things that you always keep in mind, or you would like to recommend to people
Okay.
starting out, probably.
The simplest and the most important thing according to me is to keep it simple. Keep it simple. I see a lot of people, like they're trying to make investing complicated. It is not complicated. It is as complicated as you make it. So you don't
Hmm.
have to like track 10 type of different things. You don't need to have 2 3 screens. You don't need to have like all those charts and like pattern and whatnot. Just be aware of your surroundings. Just try to understand that the thing which you are putting money in, do you understand that company, that particular stock or not? If you just right now look around in your room, you will find a lot of companies which have those products, right?
Hmm.
Majority
Hmm.
of those companies will be public companies. That means they have a stock. If you are a customer, you already understand that product. You already have a sense of belongingness. So that's a starting point. I won't say that because you are a customer of a company, buy the stock. No, hell no. But that's a starting point. And then
Hmm.
it never hurts you to learn basic fundamental analysis. And it's a like a very hard term to listen, but it's not very like tough. It doesn't matter where you come from, which field you are from. It's never tough to read a balance sheet. It's never tough to like interpret a financial statement, like a profit and loss statement or a cash
Hmm.
flow statement. Even if you just do a basic Google search on, go to investopedia.com, they teach you everything in like a very basic language. So I would just say that keep it simple. Try not to complicate it. Always make sure that you are investing money in something which you understand. Do not fall for like FOMO. Do not fall for FOMO. Like I have
Hmm.
seen so many people losing so much money just because everyone is putting the money, let me put it too, and they all go crashing down. Like Adani
Hmm.
stocks is one of the biggest example. Like people have lost so much money there, and people have made so much money as well. I'm not saying that people didn't make money, but it majorly, people who make money are full-time traders and institutions. Retail investor on an average, they lose money always when it comes to FOMO. So nothing, I don't have any sort of technique, and I wouldn't even call myself as like a very big or grave investor. No, even I'm learning. I'm like too young to like comment on this. But again, having a long-term mind, being disciplined, being consistent, like not being panicking, that investing is less about knowledge and more about you as a person, being disciplined, being consistent. That's really very important. So again, it's a very boring task. It's like watching grass grow, just to repeat myself. And yeah, just keep at it. And if you're doing it in the first place, you are again ahead of majority people in our country, because
Hmm.
hardly anyone invest. And even if they do, they are just thinking short term. They're just thinking, try to like become rich quick. Nobody becomes rich quick. And if they do, either they were just too lucky or they did something unethical. So I just feel that being rich quickly is like just out of the playbook, according to me.
Hmm. Wonderful. Wonderful. Right. So I think Rajbhai will be ending the episode there. And any parting notes from you? And how was this experience for you, being having a conversation with your college junior on his
No,
podcast?
it was. It was a totally an honor for sure. Like I love to have these conversations around life, finance, career, whatever. Every time happy to talk about it, happy to guide, happy to learn from you, teach you something. And yeah, it was a great conversation. I really enjoyed it. And yeah, thanks for having me. And I look forward to like more of these conversations. And again, feel free to like, DM me or whatever. Like my Instagram is not there anymore. Else I used to tell people that, just like even if you're a stranger, just DM, I will help you.
Huh,
But again,
huh,
I'm still on LinkedIn. So that's
huh.
that's always a possibility. Any sort of help anybody needs, any sort of guidance. Because like, I just feel in this concept of like paying it forward. A lot of people helped me when I was in that
Hmm,
journey. So now it's
hmm,
my duty to pay it forward. Just like a small incident I would like to share here. While looking for a job in the US, I was like, networking a lot on LinkedIn. Randomly I was reaching out to people from like analyst level to managing director level. So one of these investment banks, a very big investment bank in the US, his managing director happened to just reply to me. I was shocked. I was like, oh wow, okay. But
hmm,
again, he replied fine. But the point is that he helped me a lot. He gave me so many
hmm,
email IDs of people to like send my resume to. He guided me in such a way. I was a total stranger. He must be such a busy person, but he helped me, and I was just thanking him. He said that one line that, hey Raj, when you will be a successful business person 30 years down the line, and when some fresher like you reaches out to you, just
hmm.
help them and pay it forward. And I was
Wow.
like, oh, that really like, stayed with me. And since
Hmm.
that very day, I've been just trying to like pay it forward, because it all comes back to you. So yeah, that's me.
Wow, that coming from somebody who's done that is so good to hear and so refreshing that, people do that. Wonderful. So, yes, people, thank you so much for tuning into this crisp, wonderful conversation with Raj Bhai and myself. Hope you found value. Hope you liked the episode. If you did, do actually like it, do comment, do subscribe, and we'll get back to you with another one soon. Thank you so much, and bye bye.